Wise has moved billions of dollars across borders. It has never sent a single one of them across a border. That's not a trick, that's the entire company. And by the end of this, you'll understand why banks can't just copy it, even though the idea itself is embarrassingly simple. Two friends in London, Tavet Henricus and Christo Kerman. Tavet was paid in euros, needed pounds. Christo was paid in pounds, needed euros for a mortgage back home. So instead of paying banks to convert it twice, both ways, they just swapped. Tavet's euros went to Christo. Christo's pounds went to Tavet. Nobody's money crossed a border, it just switched owners. That happened in 2011. It's still, technically, exactly what Wise does today, just with 19 million people instead of 2. And here's what people get wrong about this story. It's not a cute founder anecdote. It's a working prototype. Most we started in a garage stories are decoration, added after the fact to make a pitch deck sound scrappy. This one is the actual mechanism running by hand before it had a name. But a two-person currency swap and a $5 billion company are very different things. So what happened in between? That's where it gets genuinely strange. This is something banks don't want you thinking about too hard. When you send money with Wise, your dollars never leave the country. They land in a local US account. At the exact same time, somewhere else, someone's sending money the opposite direction, say euros into dollars. Their euros land in a local European account. Wise just matches the two, swaps the paperwork. Nothing physically crosses anything. Multiply that by millions of transactions a day, and you get something stranger. Most days, the flows don't perfectly cancel out. More money wants to go one way than the other. So Wise built something closer to a bank's treasury desk, using its own reserves to cover the gap, live, using data to predict which currencies will be short before they run short. And then it did something almost no non-bank has ever done. In 2018, Wise got plugged directly into the Bank of England's own settlement system, the exact pipe banks use to move money to each other, with zero middlemen. No bank in between, just Wise, connected straight to the source. So back to that question from the start. Why can't a bank just copy this? Because the matching idea itself, not hard. Any decent engineering team sketches that on a whiteboard in an afternoon. What's hard is what came after. Spending a decade getting licensed, country by country, to plug directly into settlement systems the way Wise did. You can't outcode a banking license. That's the real wall here, not the cleverness, the paperwork nobody wanted to do. Quick proof this isn't just a nice theory. Banks move money through a chain, 3, 4, sometimes 5 other banks, each one skimming a fee along the way. For a bank to match Wise's price, it would have to gut the same system that's currently making it money. That's the trap. These numbers will blow your mind. They also show that Wise actually is intentional about its growth. Last year, it cut its average fee, again, down to 58 basis points. And out of £444 million it earned in interest on customer money sitting in accounts, it handed back £161 million of that on purpose. That's not charity. That's a company structurally choosing growth over margin one more time. A new threat has emerged, one that could possibly give Wise a run for their money. Stablecoins, a cryptocurrency that dollar can settle in seconds with zero local bank accounts needed anywhere. On paper, that sounds like it erases everything Wise just spent 15 years building. But go back to what actually stops a bank from copying Wise. It was never the tech. It was the licenses, the years of anti-money laundering compliance, the trust built jurisdiction by jurisdiction. A stablecoin company still has to build all of that from zero before it can touch a real customer at scale. So the same wall that kept banks out might end up being exactly what keeps the crypto challengers out too. What's the real lesson in this? Whatever you are building, don't just try to undercut a competitor on price. Find the place where matching your price means they have to destroy their own business first. That's not a discount. That's a trap they built for themselves.